Hey everybody, Chuck Barone. Wednesday, May the 10th, 2023, CPI Day. This is the day we've been looking for this week. Still some big stuff coming tomorrow and Friday, but this was the day. And I guess the market's seeing it how it wants to see it. So you get mixed results everywhere. The players in the market seeing it how they want to see it. The bulls seeing it as real positive. Bears seeing it as not so positive. So mixed results today. We'll go over all the details in a second. But before we start up, just want to welcome everybody to the show. Thank you guys for your support and everything you do for us every day. We appreciate you guys. Okay, so the markets today. Here's what we're seeing. Okay, so the big number today we were all waiting for was the CPI number. Last month, top line at 5. Core number 5.6. New numbers come out this morning. I'm waiting with bated breath, watching my Bloomberg. Top line 4.9, core 5.5. So basically both numbers coming down a tenth of a point. Shitty. But the market's celebrating like it's just the greatest achievement ever. Like now inflation's so low we can cut rates. So the market started off pretty hot, ended the day mixed. The Dow losing 30 points, ending at 33,531. The S&P gains 18 points, 4,137. And the NASDAQ jumps 126 points, 12,306 on that index. So the market mixed, not really much there. Tomorrow's going to be another big day. We're going to get the PPI, and we're going to get the unemployment numbers. So the market waiting to see, I'm sure, those numbers. People placing their bets, like I was saying. Half the people believing this is good. Half the people thinking, yikes, it's not so good. Bond market, though, today, thinking things are good. So the market rallies, yields coming down. The 10-year drops 8 basis points to 3.44%. The 2-year drops 11 basis points to 3.91%, so it's back under 4%. There was a very short time ago when all of these were over 4%. The market just wants to buy into this notion that, we're going to have a short pause and then the Fed's going to start cutting rates. I don't think with 5.5% core inflation that's really going to be the reality of how it works out. We'll see what PPI brings tomorrow, because that's always foreshadowing what future numbers are going to look like. Unless that comes down pretty dramatically, I'm going to be feeling pretty bearish about where rates are going to go. And also, obviously, that makes me bearish on the bond market and probably bearish on stocks too. The dollar today, down very small. 101.44 on the index, a big nothing burger. The dollar just been kind of sitting there. But gold and silver reacting to that, reacting to the data today, down very small, with gold down $3.20 per ounce, $2,031 even. Silver down 20 cents per ounce, $25.38 per ounce. I tell you right now, guys, these are solid numbers for gold and silver. These metals, I can't say it's really a bull market. I just believe they have a lot more room to the upside, and we're going to see that upside come to fruition. Oil today, down small, down 93 cents a barrel, $72.78 for a barrel of West Texas Intermediate. Kind of just like I was telling you guys, right in that trough between 70 and 75. That seems to be where it's most comfortable over the past at least 6 months or so. It seems like it'll break out every once in a while on news, OPEC or whatever, and then then you'll get the other side of the news where it's China, demand, blah, 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 goes down under. Typically, though, 70 to 75 is where it seems to be most comfortable. Bitcoin today, up $220, 27,878. I think Bitcoin, the beneficiary of some of this banking fear, people taking some of their excess funds, parking it in cryptos, Bitcoin. So I think that Bitcoin's still, having some difficulty breaking through that 30,000, but holding its own nonetheless, in spite of good news and bad in its own market and the overall markets and economy. News you guys need today. Well, of course, the big news of the day, CPI. Top line 4.9. Core, 5.5. Now the core rate basically has been the same all year. It just really hasn't moved much at all. So now, we're going to hear arguments on both sides. Oh, these numbers were great. They were right where they were expected to be. So now we know the Fed can pause. Well, they're going to get a whole bunch more data between now and their next open market committee in June. I really believe that if there's any kind of setback to this plan, it's so fragile. And these numbers so close. I mean, really, you're going to call a drop from 5% to 4.9 any kind of real progress? Really? You're going to call a drop from 5.6 in core to 5.5 any kind of real progress? I don't see it that way. And that core number staying sticky high is the worst because core typically excludes energy and food, which are the big volatility ones, right? So the core number is the one the Fed's looking at, the one most economists are going to be looking at. It doesn't have the volatility of the top line number does. Pretty bad number. 5.5. That's a long, long ways away from their target of 2. Anybody really believe that, we're going to get that core rate down from 5.5 to 2? Leaving rates where they are, or starting to cut rates later this year? Does that sound feasible? Because it doesn't to me. So here comes the arguments for pausing or raising, cutting or not cutting. Guys, we all want to be optimists. We all want things to be good and the economy to be normal and everybody to make money and do well and have the things they want. We all want those things. But with these numbers, and all of the stuff we've been talking about, the negatives in the economy, the political situation here at home and around the world, inflation still sticky high. We talked about that in depth yesterday about how it worked out last time with inflation, how it took them 18 years to get rid of it. But now we're going to have this miracle recovery where, we're going to get rid of it all in 1 year of rate increases. I just don't think that that's going to work out that way, guys. So I'm preparing myself accordingly, man. Buy a little bit extra silver, especially at these prices. It's going to seem cheap in a while, man. Start stacking cash. I mean, obviously, the dollar, who knows? If the dollar blows up, which is a lot of people's fear, it's the end of the world anyway, man. Everything's denominated in dollars, so I guess that would really be pretty bad for the stock market, the bond market, the real estate market. Anything denominated in dollars would have to have some kind of conversionary thing. It's just so until that happens, stack dollars, guys. Hold dollars. Obviously, this inflation is not good for holding dollars. I understand that, but the dollar is the medium right now that is accepted. So we have to plan according to what the reality is, not what we wish it was or what we hope it would be or anything else. So save your dough. You'll be glad you did, guys. I mean, this inflation is not going to end well. There's going to be a recession. The Fed predicting an easy and mild recession. I just don't think it's going to work out that way. Once the unemployment numbers really turn, it's bombs away, man. So act accordingly. Warren Buffett, probably maybe one of the smartest, best stock operators of all time. Obviously one of the most successful. He's certainly made Brazilians of dollars doing what he does. Well, they just had their annual meeting at Berkshire, and Warren not sounded very positive, guys. He warned that this incredible period where the U.S. economy is coming to an end, that he expects the majority of our businesses to have a serious downturn and lower earnings. In the first quarter of this year, he sold $13 billion worth of stock, but only bought $3 billion. So he's lightening his exposure to the stock market pretty dramatically. If Warren Buffett's scared, guys, I'm scared. This is a guy who, who always has preached that the best time to buy is when everybody else is scared. The best time to sell is when everybody else is greedy. I guess he saw greed there in that first quarter, and he's not seen enough fear yet to be wanting to buy. He's actually the one that sounds fearful with the words he used. So if he's expecting a recession and a pretty steep downturn, basically the incredible period for the economy being over, this is a guy who's right. Nobody's right 100% of the time, but this guy's right a lot more than he's wrong. So again, more evidence. The evidence we're looking for, all pointing to the same direction, guys. Now let's talk real estate for a second. Here in Vegas, real estate prices actually starting to go back up. So we were at a peak of 482. We dropped down as low as 420. And now prices on the way back up, the median right around $430,000 here in Vegas. The reason for this, though, is not a sizzling hot market. It's not a bunch of crazy buyers who can't wait to, buy houses. That's not what's happening. What's holding prices up and forcing them up is no supply. There's no supply of existing housing. They say that 12-month supply is a healthy market, 6 to 12 months, depending on who you ask. I think we got about 6 weeks supply right now. People that own houses are very reluctant to sell them. They own their house. They typically are going to have a very low rate mortgage, 2%, 3%, in the threes, whatever. Reluctant to give that up to go buy another house, even a smaller house, and have a significantly higher payment. Makes sense. Nobody wants to sell into this market. I don't blame them. But what's happening is it's shifting everybody then to new build properties, which are typically more expensive. There are new builders who are offering massive incentives to attract that business and get it, and they're getting it. So, new build business is actually up in real estate. The supporting stuff, the existing housing, that is not, okay? Buyers now, the springtime is here. This is the time of year people like to buy houses. Buyers are out kicking the tires, talking. I've had people in my office talking business, and it's really difficult time to be a lender right now, guys, I'll tell you. Because when you're talking to a first-time home buyer, and they're looking at buying a house that's $400,000 to $450,000, and they're coming in with a minimal down payment, you're talking to them of payments, $3,000 a month. I would never take a payment like that. So it's really hard for me to be super excited about offering that to a client. So it's really tough times in this industry right now for existing housing, for mortgage guys like me. Market actually starting to look up. If you talk to realtors, they're feeling positive with prices going back up. We'll see. We'll see if it can hold up. Builders can only build so many houses so fast. As the market gets more saturated, if rates continue to go up, I think we could get a surprise rate increase or more this year. It's going to be a fascinating time, guys. Anyway, tomorrow's a huge day. Tomorrow we'll get unemployment numbers first thing. We'll get the PPI numbers. A lot of more pieces of the puzzle put into place tomorrow will kind of show us a little bit more about where we are and where we're going. We're going to be here to bring it all to you guys. We appreciate your support. Please hit the like button if you like what you're hearing. Ask your questions and share in the comments. If you haven't already, hit the subscribe. Make sure to click the bell for your notifications. We'll be back tomorrow to bring you the details you need. Until then, guys, take care.